All right, what is going on, everyone? The crypto market just got slammed with a double shock, and sentiment is spiraling right into a state of fear. We're talking massive capital outflows, $100 billion just gone from the total market cap. So let's get right into it, because today we're breaking down two huge and kind of conflicting stories. We've got a hesitant Federal Reserve that's causing all this short-term pain, but then we have a forward-looking European Central Bank that might just be paving the way for some serious long-term growth.
But first, the headline number you absolutely need to see is this one. In just 24 hours, Spot Bitcoin ETFs saw a record daily outflow of over $500 million. This is institutional money heading for the exits, and it really sets the stage for the crisis we're seeing right now.
And yeah, this has officially tipped the scales. The crypto fear and greed index has plunged straight into fear. This sharp shift isn't random. It's a direct result of that double shock I just mentioned. So what exactly happened? Let's break down these two events and figure out what they really mean for the market.
Okay, first let's look at the immediate pressure point. This is the institutional reaction to the latest news from the U.S. Federal Reserve, and believe me, it has caused investors to pump the brakes hard.
So here's the paradox, right? The Fed actually gave the market what it wanted, a 25 basis point interest rate cut. But, and this is the crucial part, it's what came next. Fed Chairman Powell's super cautious tone about any future cuts, well, that just injected a massive dose of uncertainty into the market. And the market, well, it reacted instantly. And you can see the impact right here. Bitcoin is struggling to hold ground around $108,500. Meanwhile, Ethereum is feeling even more pressure, dropping down to $3,800. Look, this isn't just a minor dip. It's a direct, visceral response to that uncertainty.
Now, what's really interesting here is how specific we can get. Of that massive $500 million outflow we just saw, a staggering $470 million of it was pulled from ETFs right after the Fed's decision. This confirms a classic institutional play: sell the news. The uncertainty was just enough for the big money to take their profits and go sit on the sidelines.
But while the U.S. market is reacting to all this short-term fear, a second huge story is unfolding over in Europe. And this one offers a completely different long-term perspective.
And this is the key question, isn't it? While the short-term traders are busy selling, are the long-term builders still laying the foundation for what's next? Well, the answer seems to be yes. And the European Central Bank, the ECB, just gave us a major clue as to what that future is going to look like.
And here it is. The ECB just published a clear, concrete roadmap for its central bank digital currency, the digital euro, with a launch target of 2029. This is huge. It's a powerful signal that really reinforces this whole trend of institutionalizing digital assets and, of course, regulated stablecoins. Now, this kind of regulatory clarity from a major central bank, it doesn't just create stability. It actually unlocks a massive opportunity in a sector that institutional money is, let's just say, extremely interested in.
We're talking about real-world assets, or RWA. Basically, it's the concept of taking things like real estate or bonds or even art and putting them on a blockchain as a token. With clearer regulations in the pipeline, this is where many analysts expect to see serious, long-term institutional capital start to flow. It's like a bridge from the old world of finance to the new one. So the takeaway here is to watch these specific sectors. As this trend picks up speed, the big winners could be projects focused on RWA tokenization, decentralized finance platforms that are built for institutions, and of course, heavily regulated stablecoins like USDC that can really act as the rails for this whole new economy.
Now, as this whole institutional framework with things like the digital euro starts taking shape, we're seeing some interesting counter-trends pop up. For example, the privacy coin Zcash has just exploded, up over 432%. This could be a sign of a flight towards privacy as official digital currencies and tighter financial controls become more and more widespread.
And on the flip side, just look at Solana. Even with really positive news about a potential spot ETF, the price is struggling. This just confirms that sell the news mentality we saw with the institutions earlier. You know, in a climate of fear, any good news just becomes an excuse to take some profits off the table.
Okay, so we've got short-term fear from the Fed clashing with a long-term bullish signal from the ECB. With these conflicting signals flying around, how should we even be thinking about a strategy for right now?
As we saw, the Fear and Greed Index has dropped to 34, which is firmly in the fear zone. Now, while this level of anxiety can sometimes present buying opportunities for the contrarians out there, the key right now is caution. Without institutional capital flowing back in, trying to catch a falling knife is just incredibly risky.
So, the takeaway strategy for today really is a defensive one. First, with capital leaving the market, it's probably a good idea to reduce exposure to riskier assets, especially any highly leveraged altcoin positions. Second, and this is the most important part, focus on the single most important data point right now, the daily ETF flows.
And let me be really clear about this. For the immediate future, this is everything. The daily net flow in the Spot Bitcoin ETFs is the clearest signal we have for whether this institutional sell-off has run its course or if there's more pain to come. It tells you exactly what the big players are doing.
And that brings us to the final, critical question. Right now, the market is in the hands of institutional distribution. So what do you think? Are we going to see this trend reverse? Will that institutional money start flowing back in tomorrow? That's the signal we're all going to be watching for.